investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 19th of December, past midway through the month, almost wrapping it up. Unbelievable. Dow's up 280 at 48,229. We remain long. I love this. Look, I don't know how many times I can say it, but it's something that I do, and it's something that I find is very important. So I'll just repeat it again. When that 9-period moving average, when the price pulls back, but the 9-period moving average, this green line here, remains green above the 14-period moving average, the black line, and the price comes down, it usually gives you a nice spring to the upside as soon as it gets released like a cork in water, right? But you've got to look at the MACD. The MACD is up just a little bit. It has pulled back. It is up. Stochastic's way down at 51%. So I remember I got a thing from Fidelity recently about technical analysis and all about the MACD. And I don't know who wrote it. I meant to write to them. Years ago, I used to do technical analysis for the technical department. But I found that, wow, most of those, that was a long time ago. Most of those people are not technicians. There are some, but most of them are just a fundamental analysis. And it was really interesting, but it was not right because the MACD, I don't know if I can show it to you here. Have I got instances of it? I've got it written down which ones work. But anyway, there are times when the MACD can be pulling back for ages. And the price, well, here it is. Look, the MACD is pulling back. Look at that move in the Dow going to 48,431 back in, that was 12th of November of this year. So you can't rely on one technical indicator. I rely on one technical indicator I call it the technical tool of last resort. The 9-period moving average. Look at this weekly chart. When I did my webinar on Tuesday, I discussed this. Look how long that 9-period moving average has been, the weekly chart has been so strongly over the 14. And now another technique that I developed, we're going into the Chapman Wave inside track repellent zone. Look how often this little narrow, this is Technical Friday. I'm just taking some time. I've got a lot of questions that people asked about. I'll get to it, but I really think it's important, at least for the veracity of technical analysis, to be able to look at some technical tools that are really helpful. That's all. So this has been a fabulous indicator, the pink and green narrow little mini channel within the bigger channel, up channel, that is diagonal channel to the upside from left side low to the right side high. And it's been resistance. If in January, all of a sudden, we're breaking out. We're at 48,220. The all-time high is 48,886 just a week and a half ago. That's the Dow. If we start to break towards the 49,000s, wow, all of a sudden, people are going to start getting those 50,000 hats already, right? In fact, we should start printing them up. 50,000 for the Dow. And look at this. This is still, what was that? Oh, no. Something happened. Electricity. Am I still on? I hope so. Let's see. Just someone say yes in the den. Just put in a Y. Okay, I'll just keep talking. Something did happen when click, but I think we're still good because I've got battery power. All right. So within that context, nobody's put in yes. Okay, good. All right. So the Dow, that's the story. The S&P, we're going to the end of the year. Remember back in November, I said if by the second week of November, this is kind of the back of my mind. I've always kept this as a kind of a philosophy, a mantra, that if by the second week of second week of November, in a year where the market, especially the Dow, has made higher highs and survived the September, October usual sharp pullback, if we are strong in November, the second week, it usually means that you're going to be close to that high by the end of the year. We'll see. End of the year is still a good few days away, right? Anything can happen, especially today. You've got a market up, Dow's up 247, the S&P's up 49, and it's options expiration, triple witching. By 3 o'clock, you could just suddenly have that sudden downpour. Whoosh, the storm comes in. Anything can happen. All right, so look at this. Here's the S&P. Look at the 9-period moving average. Look at the way it struggled in this rectangle formation right here to break to new highs. So that means I got to consider that there is a chance you could make for those of you who chose to do my webinar, if you're new subscribers, look at the one on rectangles. You'll see that there's a pattern that I look at, which is within a rectangle. If it goes straight up to the previous high and just misses it and then starts to pull back, you got to consider that could be an H pattern. It needs to break above it quite sharply. From the 9-period moving average, look, the stochastics weak, the stochastics, at 81%, that's good. MACD just flipped to negative. Retro strength is a little bit negative. On-balance volumes pull back from being overbought. Only the 9-period moving average and the stochastic are holding things right now, but they're holding them pretty darn well. And here's the arch formation potential in the daily chart. I don't think we're going to arch over, but in the meantime, it's going to be really important by Wednesday. I think it's an abbreviated session Wednesday that we are trading towards the 68.75 level, and we're at 68.22 right now, up 47. Now let's go to the QQQs, the Index 100. A real mixed picture there because you've got some stocks that have been really bad and some stocks that have held very well. And just on the last 2-3 days, you've got, for instance, within the QQQ, you've got Rocket Lab, and look at this. Just did it as we're speaking. It went to a leg C. Wow, we've been waiting for that. We've been long this, and we like it very much. Rocket Lab. I didn't expect it to do that so quickly. That is really nice action. It pulls back, yeah, that's fine. To get to a leg C, I want C to be quite powerfully above B. That was 68.18. Today's high is 60. Wait a minute. If that's 68.18, why did I not update that? 65.18. I can't just say, what on earth am I thinking? 65.80. And today is, the high so far has been 65.47. Just a little bit. I like it to be much higher for leg C. In the meantime, you see, this is what I mean by the 9-period moving average. Look what happened in the weekly chart. It went close to closing negative last week, 2 weeks ago. And look what happened. Springs back, and that gives you a powerful up move. It's just a beautiful technique. All right. Let's go to the IWM, Russell 2000, same thing. Pulls back very sharply. It is not as strong as it should be. It's up $1.77 at 250.53. I need to see, just to feel comfortable that 9-period moving average is acting like a spring-loaded a trampoline to the upside. I need to see not just yesterday's high of 251.36, but I want to see 252.16 taken out. That's the high of the 17th. And it has to be done. Ooh, I'd love it today. Maybe not, but by Monday or so. Okay. Got the break coming up. You need the SMHs? Got the SMHs. Look at that. It went pink on the pullback. That means it's got a lot of work to do to get the 9-period strong again. It's up 356.31. This is the VanEck Semiconductor ETF. I'll be right back. Basil Chapman Tiger Ignitions Hour. Dow's up 300. S&P's up 49.50. Very good.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Came in about what would absolutely confirm a restart in the monthly leg B. So I'm not sure which index, but the one that is certainly the S&P 500 is one of the really important indices. You've got New York Stock Exchange, you've got all other indices, but I would say that S&P 500 probably is right in the middle. You've got the Dow 30. I consider that to be really important. That's why we always focus so much on the Dow, because it's America's economy right there. But the 500 is really a fantastic mix because it has some of the best of the NDX 100. So I like it. So it's really important. Look, so let me just do this because some of you did not take my course on my webinar on Friday. So I'll just show you something very important. And if I can just figure out what I was about to do, I was talking about that. Oh, that's right. Going to my newsletter. That's what I wanted. My newsletter right here, coming up. And this is going to be important because in the Chapman methodology, you have peak A, B, C, D, E, F, G. You never have an H. It took me a long time to figure that there was no. In fact, I started off calling it a 7-wave form because I thought we'd go to Ds. And then thank goodness this was back in 1987, August of 97, and my first client was Fidelity, big client that is, and they had me as I had a hotline, and I used to also go in every couple of weeks with my charts on paper, that is, and then no, that's right, I had someone computer. We just started that, and the question came up of in the waveform, what happened? So I said, I really like what I'm doing, but I think that there's a chance that we could go to a higher high, going to, I think, 27. I'm not sure exactly what the number was. I think we can go to a leg E and maybe even an F. But they didn't quite know what I was talking about. I said, look, don't worry. And on the hotline, I managed to get the top, and it was at an F in the hand-printed chart. That is a pencil and paper. And ever since then, I said, oh, it can't be a seven-way form. It goes higher than that, right? So it goes to F, G. G is the highest. And then I figured out after a while that it doesn't go to H. There's never an H. It recycles. Well, in this case, I wanted to show you this because if that's the case, that you don't have an H, then look how nice and simple this makes it. Look, in the Chapman wave methodology, you identify the lowest low, goes to peak A, pulls back, and if it goes above A strongly with good technicals, and I spoke about that, I gave really good examples in the webinar. It was really a very cohesive, I think. I had some good compliments I've had from people that have watched it. And what I'm saying is, that goes from a buy signal. Invariably, it gets upgraded. Once it gets upgraded, it should go to at least a D. It can go E, F, and G, but D is the obligation of the Chapman wave buy signal to buy mode. Simple. Well, at D, you reassess. But wait a minute. If you get a buy signal to a buy mode, and you get A, and I'll put it as an alternative. I didn't even want to put it in as an alternative, but I'll do that now as a lesson. Look, G/A in the S&P, uppercase on the way up. So this is G/A. 1 penny above 6,920.34, the high of the 29th of October. And what do you get? You get H. There's no H, so it has to be a B. So the question came in, what would constitute, what would be basically confirm, it's not a restart, it's just a brand new buy signal to buy mode, is if we go to 6,920.35, doesn't matter when, because we've already made a peak A, because remember, November was lower than October, not in the Dow. So that would be confirmed, and would confirm it for all the indexes. Because if one is doing it, the major one, the S&P 500, the others are going to follow. Whew! I hope that's clear. Let me just say it again. We got an instant restart, peak E, and an F. Then you got a pullback, basically at 4835.04, right there. That was on. That was in April the 7th. It took out the instant restart trough. So that alone says that this is a brand new A. I said, you know what? It's a monthly chart. Let's look at the long term. And now you'll have a double confirmation. We still have to wait for it. We're only at 68.21. 68.21 is 100 points away, 101 points away from the all-time, that we have to break this all-time high. So that's what I'm saying. All right, making it as clear as possible. Great. Now let's go to the other stuff that we wanted to do. I did that. Just quickly, IWM. It's pulling back a little bit from the intraday high. It's at 250.45. Days young. Anything can happen. I think you got to consider that at 10:20, 4 minutes ago, that's where new buyers and sellers come in, and you'll see in the E-mini, look at this. Here's the E-mini. There's your peak D. Remember, the fourth highest peak where other things can happen. But wait a minute. It's peak D in the 1 minute chart, but it's only a C, peak C, in the 5 and a peak B in the 10. Well, two things happen. One is that very opening gambit with the 8:30, whatever it is, economic news, and a big spiral to the upside before the opening. Occasionally, we saw that just recently, occasionally it can fail. You have the Eiffel Tower straight up, straight down. Very often it's just an A that does it. In this case, you've got a lot of technical aspects in the 5-minute E-mini chart, S&P, saying, hey, that 9-period moving average so much higher above the 14-period moving average says you could pull back, but there's a chance that within the next couple of hours, you'll make a higher high above today's high of 68.87.50. All right. If it pulls back even further and goes down to 68.60, that green 9-period moving average could go pink, and then that's it. You got your possible Eiffel Tower straight up, straight down. So the day is young, But I'm looking at this and I'm saying there's a lot of evidence to say after some profit taking, we should have another bout of buying, and that should take it to higher highs. All right, let's get out of that. Other questions came up. Let's just continue here for a moment. So the TLT, look at this. This is the arching over of the monthly chart. Lowercase h goes to a lowercase m, and then it pulls back, but it has not. The iShares 20-year Treasury bond ETF has not taken out the low of October of 2023 at 83.58. It's held so far. That's kind of a good thing, but it's really just going sideways. So look at the weekly chart, a very sharp pullback. So you should expect the TBT, that's the yield itself, to be going high, and there it is. So this is a leg B, but the 9-period moving average hasn't crossed positive, so there's still a chance this could deflect lower. You've got your peak D in the daily chart of the TBT. That's the ultra-short Lehman 20-year Treasury bond ETF. So I've been speaking about this for ages. I don't want to go to the chart right now, but I've been saying yields can just remain unimportant for a while. They'll become really important if the yield starts to go to the 35s, 35.50 or higher. That's going to be quite serious for the market. You've already seen it in Toll Brothers, right? Look at this, Toll Brothers down another 73 cents today. It's been struggling. It's not failing, but it's struggling some. I'll be back in a moment. Dow's up 260, S&P's up 40.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So a question came in about Wells Fargo. Let me just finish this up. You can watch me do this live. This is the weekly chart. Peak A, B, C, D, pulls back, starts a brand new A, B, C, D, E, and this could be F, right? All right. So what we've got is the question is just what about Wells Fargo? Would like to add. So I'm going to call this a B. It could be an alternate count. There's no reason. Everything here says this should be a peak B. Wells Fargo, WFC, trading at 92.25, up 77. This is in the area of the large caps. These are the money center banks. Now, what's really important about this, if you don't mind, I'm just going to go here. See, is that working? I think that's working quite well. So within the context of, is that good? I'm just deciding on something here. Okay, put that in there. Yeah, so I'm sorry to stall like this. I just needed to clarify something for myself. Within the context of, let's go back to the financials. Oh, that's the chart I wanted right there. I wanted to show you something. I've used this for a long time. So far, it's really been a wonderful template to be used for the. I'm getting a little. Something's going on. I just need to check. Yeah. Okay. So within the context of easy techniques. Look, I've overlaid the monthly chart of the SPY, which is the blue line, and the XLF, the S&P Select Financial, of which the Wells Fargo is involved. And look at how nicely the peaks and troughs have complemented one another. The only difference is that the XLF has gone to a higher high, and so far the SPY hasn't gone back to an all-time high. But this is the month is not finished, and they actually parallel you very nicely. That says to me, as long as the financials are doing that well, there's a really good chance that the market should continue to really be solid with good basis of support. All right. Now, within the context of WFC Wells Fargo, I like it. Where would I add? So I've got this, look, this is possibly 1 to 3 bars. I have to consider that it could be an instant restart right there, right? Instant restart. But it went to E and then pulled back. So that says, it's a little different because this could in fact be an alternate count in the weekly chart. So let's just think of it, skip the weekly chart because you aren't going to get to a weekly chart unless the daily chart improves. Well, I consider this to be a peak B and it's doing very well. So I'm going to join the pattern that I'm looking at. So where would I add? I probably would say to you, I'd have a split add-on position. I'd have one split right here at 92.22. But I would have to do it in time as well. So I would start at 92.20 right now. Maybe that's not the exact moment, but I would also give it, I wouldn't like to see another trough to the bottom that's deep. So this one should have a stop. I'd actually have a stop on this of right there. I'd have a stop of 92.21. I'd say, you know what, 90.30, if that's okay with you. I'd have a little bit of a stop. That's not the point. The point I'm making here is that the 9 is over the 14. The price is held beautifully. The MACD is good. Stochastic's at 78. I like it at 80, but it's still pretty good. So this is what you want to see. Without taking today's low is 91.60. Without taking out today's low, by Monday, I would love the body of that candle from yesterday that opened at 93.03, went higher, but then closed down lower at 91.29. I'd like that to be taken out in the next 2 days. But I would not even, I'd only give it a small entry right now. Why? Because I'd treat it as a split, because I'd either say 1 penny above 94.26 stars leg C. Oops, yes, 94.26. You go, no, 94.27. Yes, go to 94.27 and then add. So a little bit here. And then if it breaks into leg C, I would add a little bit more. I wouldn't get too carried away with the add-on. It's looking very strong, but just because of market fluctuations. I hope that helps you. And just on a very short-term basis, a close below 90.70 says, it's going to take a little bit more time. That's why an entry here, smallish entry as a split entry on what you're looking for. And then you can consider adding, as I say, 1 penny above that sauce leg C. All right. Next question came in. I wrote them down here. Oops, there's another one over there. Did I see that? Yeah. Okay. Okay. There. Okay. So I just want to go. I like to go in order of the questions when they're in the den and when they're in Tiger YouTube. So, okay. Next question came in. Could I look at, where was it? Oh, UPS or Federal Express? Good question. UPS or Federal Express? Let's go to FDX. Had earnings last night. Big spike to the upside overnight, and then all of a sudden it's down. Now it's down 380. It made a peak D. So the day's low was 270.80. And here it is at 283. What a good comeback. All right. So that's nice to know. So Federal Express, I've got as a target for, this is a weekly chart, so that would be, it's a little aggressive, isn't it? By about the second week of January, maybe the third week of January, here's a Chapman wave, inside wedge, dash green, uptrend, resistance target level, 308.53. I think I got a little carried away there. That must have been a little while ago. So it is the high of 295.24, the high of the 20th of December, the week of 20th December of 2024, exactly a year ago. Exactly a year ago, it was in this area, 295.74 with a low of 270. So, yeah, that's interesting, isn't it? So I should have done this. Let me do this right now, do it live. Let's go there. I have to look for, this was the candle that I used before. I used that as a particular candle because it was a doji type candle, because I couldn't use the number of bars on the left and the number of bars on the right, because the trough was November the 11th at 194.30. So let me just do this. I'm going to click, go to the right, go to the right, go to the right. New parallel. Okay. So that goes right to, just goes right past. Oh, it goes to this week. Well, it's already too late. So the there we go. So the 295.24, that's my target, and my target would be for Federal Express, I say mid-January. That's where it should get to, that particular level. Now I'll do UPS. I'll be back in a moment. Down at 307.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So within the context of that, the weekly chart, let me just go back, that was FCX, I'm sorry, no, FTX, there we go. FTX is trading right now, as I say, at 284.52, down 260 after really plummeting early on and now coming back. So the support level is really difficult now because we don't know whether by the end of the day it gives back some of this because it was an emotional sell-off and an emotional spike. So all I can say is that the level to watch is 282 as your first support, and then 279. Closes under 279, you've got yourself another good couple of days before it can regain its upside action. So the UPS, United Parcel Service, look at this. Look at the daily. It looks fabulous. Leg D goes to peak D. Leg E goes to peak E. And it's on the way up. 9 period over the 40. MACD good. Stochastic good. Everything's just cool, right? And then all of a sudden what happens is you look at the weekly chart and you've got yourself a big rectangle with a cup formation. And the target is this first level right there, the very ugly candle of the 1st of August, where the high is 103.37 and the low is 84.28. All right. Well, 83.47. 103.37, and yesterday's high was 102.89. So with that said, you can see that the weekly chart has done really well. It's got this U-shaped pattern, but is about to bump into resistance. But wait a minute. Look at the monthly chart. United Parcel Services double bottom from the low that was made back in 2020. That was in March 2020. Oh, that was the low. You remember, we were still actually long part of position in the Dow from that level. And the IAI at 45. That's the broker-dealer ETF. So look at this, 82 round number low. Why didn't you put the? I think I did, and then I had to redo the charts because they got lost. 82 round number low. There you are. Okay, and that was back in March. And look at this. It goes all the way to a peak D. Beautiful 4 higher peaks, pulls back, and it comes back. And what does it do? It takes out the 82 round number low, and it goes to where? 82 round number low. I can't believe it. September and the next month it's 82 again. No way! This is amazing. On a monthly basis, to have a round number and a round number low that takes off and screams up to the 220s, 230s, and then comes back and has 2 times 82 round number low, something's going. Somebody is buying. So yeah, so United Parcel now for percentage gain, I would say United Parcel is Jeff, I think it was. Yeah, so this is the one. See this double bottom where it went to dreaded H and then was a successful and went to the U-shaped pattern. So United Parcel Service has the best percentage potential at 101 right now. The Federal Express trading at 283 percentage-wise. If it's going to be the leader, which the cup-shaped pattern in the monthly chart is suggesting by somewhere in January, it should test 313. Come on. Yep, test 313. That's what it looks like. That's on a percentage basis. That's 30 points. So let's call it 15%. But look at what United Parcel Service has to offer. The pink 9PM moving average is terrible still, but it's turning up in the monthly chart. The MACD is so close. Oh, it's just turned positive. But the month is not finished. You have to wait. But it's turned positive for the first time since it went negative back in 2022, about February or so, at the high, just after the high. So this is the one with the biggest percentage potential. So this is what I'm going to, let me think this through, and on Monday I'll give you an answer in terms of which one I think is the best. But just the way United Parcel Service daily is rallying, the way the weekly is rallying, it's about to bump into resistance, but it should take out in the first quarter of 2026 the high of April that was at 106.46. It should do that fairly soon. The sooner it does it, the greater the chances are that percentage-wise, this is the one that's going to give you the biggest bang for the buck. All right, so I hope I answered. I'm going to be a little more specific. I'll put it in for Monday. I'll make a note here. Monday, UPS versus FDX. All right, FDX is the winner in the sense that it's already doing it, but the one with the biggest percentage potential is United Parcel Service. But if you ask me which one would you go into right this very minute, I'd have to say FDX is the one that is in a leadership position. But the one with the greatest percentage, this fantastic 82 round number low 3 times, and 2 times in 2 months, the same low. Something's happening there. I love those round numbers. All right, I hope that answered question. Next thing, okay, Friday. Oh, J&J versus PG. Didn't I do this the other day? J&J. J&J. Johnson & Johnson, all-time high just a few days ago. Was that the all-time high? Yes, all-time high. Leg B, very strong, looks fabulous. It has healthcare products, but it also has many things within healthcare that are very important. Procter & Gamble, on the other hand, PG, down today, has healthcare products, but it's a different field. Johnson & Johnson, I think, has more of products that are in the medical side and instrumentation, etc. So they're a little different, or they're both in healthcare. But I think Procter & Gamble, everyone was talking about Procter & Gamble last week. I was about to say, hey, let's get it, because it had a round number low. The day after, it made 138.14 low on the whatever that was, the 6th, I think it was, 6th of December, and it spiraled nicely from 138 all the way to 148, and now it's pulling back. I think I said, I did this. You remember I did this. I said that the weekly chart suggests it needs a lot more time and a lot more price, because the stochastic flat at 18% is just not good. So, no, I would say Johnson & Johnson is the leader there, even though they're different prices. They're different. One's going to highs and one's going to lows. Yeah, in that case. All right, next question came in. Where am I going to here? Did I miss it? Oh, RDW. RDW RDW. RDW is red wine. Oh, red wire. It's a big difference. Red wire company trading at $7.58, up 57 cents. Periodically, this has been one of the screamers that pops up. Man, I want to go through this. We'll have time. Let me do this quickly. I'm going to run these through just so that you can look at them over the weekend. So this is I'll do the notation on this in the break. It's not very difficult to do. And then I'll come back. Dow is up 264, give them back a little bit, and the S&P is up 44. I'll be back in a moment, and we're looking at Red Wire Corporation.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me go back. So this is Red Wire, which is, where did it go? A Red Wire. I had a question about SQM as well, which is Society, Queen or something, Quimica. I can't see it from here, unfortunately. That's looking great. Let me just go backwards. That's looking very good. I would just say that one support is at 64. It's trading at 69.30 right now. Peak A, peak B. It's in leg C. Now let's go back to Red Wire, RDW. RDW trading at $7.59, up 57 cents, but it pulled back from the high of today of 816. Didn't make a leg C. So that's a pity about that. This is space and defense infrastructure, 3D printing, solar, etc. Went to a peak E in the monthly chart way back January, I think, of this year. Double top the next month. Whoosh, came all the way back down. It actually went to the 26-ish area. And now it's at a peak C minus because it failed there. Yeah, you know what? Let me do a little bit of work on this. I like it. I think it's doing nicely. If it's in the space and defense, I would rather go for a Rocket Lab. It's just a much better chart, different price completely. But you're talking about charts, talking about potential. So this it must hold $6.70. Right now it's at $7.55. If it breaks that in the next 2 days, that's a failure. But if it manages to rally to $8.45, $8.55 anytime next week, in the next few days of next week, that's going to be a positive. I like it, but it just needs a lot of work. The weekly chart is not that great. So I'm going to hand you over to Steve Rhodes. Check out my Opening Call Daily newsletter. Check out my webinar. I will be doing a video this afternoon. It won't be as long, obviously. I spent a lot of time, 90 minutes for the webinar on Tuesday. Sometimes I'll spend 90 minutes, but this, I'm just going to go over some stocks that we're looking at that I really like, that we want. Somewhere back here, we got GE, and we've had GE, we added to it, and got stopped out by a few pennies, and now it's doing fantastically. What a pity. So I'll be back on Monday. Have a wonderful weekend.